right, good morning econ students. This is Mr. Abbott and it's Wednesday morning. I apologize, got in late from volleyball last night. Here's the video, hope you have time to watch it. Today we're going to talk about the stock market. This is lesson 14, we're moving along and you guys are doing a great job. So the stock market, you've probably heard of the stock market. But when people say, how's the market doing? A lot of times it's referring to the stock market, not just a general market. Okay, remember a market is where you can buy and sell things. So you could have the local food market down the street, a fruit market, a supermarket, or the stock market. And the stock market is where people buy and sell something called shares of stock. The places that they buy them, like the New York Stock Exchange, is a place where you buy stock. So let's see, we want to talk about then three things here: the definition of the stock market, the difference between corporate debt and equity, and the social function of stock speculation. Now, like I said, when you buy stock, you're buying at a stock exchange or you're buying through a stock broker. And a broker is a company, it's a person who goes out for you and buys shares of stock for you. Now you can do this yourself, but oftentimes people don't have the time to investigate what stocks they should buy. All right. So a stock brokerage or a stock broker is a person, a company that goes out and does this for other people. Now, why issue stock? There are basically three types of business structures. There's what we call sole proprietorships, which are businesses owned by individual citizens. There's partnerships where two people come together and they partner together for their company. Or there's what we call corporations. All right, and corporations are businesses that incorporate, meaning that they have a board of directors and that runs the corporation. And oftentimes in corporations what they do is there's two ways to finance your operations. You can sell bonds or you can sell function there. So you can buy bonds or buy stocks. Now, we've already talked about bonds. Bonds are pieces of paper, they're IOUs, that say, I'll borrow money from you and I'll pay you back the money in 1 year plus a percentage of interest. All right? So we understand bonds. That's a way for a company who has needs to have more funds for a project that they're doing, and they don't want to take it out of their operational money, okay? And you pay that back over time. That's one way of financing it. The problem with that is that should you expand your operation by borrowing money, whether from a bank business loan or from investors, the problem with that is if your business is not successful, if the thing that you borrowed the money for does not increase your sales and makes you more profitable, you still got to pay it back. All right. On the other side of the coin, there's stocks, and stocks are pieces of paper, but instead of IOUs, you give ownership in the company. Okay, you give ownership in the company. That means that a person who buys so many shares of stock, okay, a share of stock is just simply a percentage, that's all that you figure out, of the company, all right? So it's like, imagine a pie. A pie is the company and people loan you money for a slice of the pie. And everybody wants the pie to get bigger, so their slice gets bigger. Let me explain that. So your ownership, when you buy a stock, you're buying a percentage of the company. And as that company grows, so does your ownership grow. You get more value. And so those are two ways that you finance a company, a corporation, all right? So I'm just looking to see if there's any definitions I need to cover here, all right? So, so stock is ownership in company. The stock market is a place where you buy these stocks. So a company can finance their operations by selling bonds, which they have to pay back. Shares of stock, you're actually selling shares of ownership. So what that means is, as long as people hold on to their shares, unlike an IOU, where you're going to pay them back and then that's it, they can hold on to those shares as long as they want, and as long as your company is profitable, and they'll be part owners in the company. And the types of shares and the larger percentage of the shares, obviously a person gets more voice in how to run the company. Oftentimes what will happen is the person who incorporates, they'll own a majority of the stock, of the shares of stock, and then the other balance of the ownership they'll sell to different people. Okay, and that's a great way to get funds for your operations, and that's good for investors, people who want to make money. And that brings us to the social function and stock speculation. Some people use the stock market, myself included, as a place to accumulate funds for like retirement. So my wife and I, we use a broker, and we hope we don't get using a broker, because you got to pay them a fee for their services. But we use a broker, and they go and they buy shares of stock for us. And there's different types of stock you can buy. There's stocks that are really safe stocks. You can buy bonds, okay, or there's what we call, there's stocks that are more aggressive in their growth, okay, so you can earn quite a bit, but they're what we call volatile, and the word volatile means up and down, up and down, and so at this point right now we're not ready to stop accumulating, so. But because we're over 60 and getting close to retirement, we are in a more of a, we're not in a highly speculative, high risk investment strategy. We're kind of in a medium risk. So we do buy stocks that do go up and down, but we're praying that, of course, God, we believe that the Lord controls everything, and that nothing takes God by surprise. So our faith and our trust is in Him. So over time, we're just keep an eye on it, and when we get ready, we'll take and we'll move our investments to safer, less speculative, less risky investments. Now, stocks, another name for stocks are called equities, okay? It just means a way of creating finances for yourself, okay? Now, back to the social function. So some people are long-term investors. That would be my wife and I, and many other people as well. But then there are people who, they don't buy stocks to invest in them. They buy them because they think that a company might be undervalued. For example, I remember when Facebook, quite a few years ago now, went public. That means that, what's his name? The guy that started Facebook, Mark Zuckerberg, when he decided to go take his company, instead of privately run, and make it a corporation, a public corporation, they do what's called an IPO, an initial public offering. And what that means is, they make an announcement, hey, Facebook is going public, you can buy shares of stock. And so I think Facebook might have started out like at $5 a share. Now, I haven't looked yet. We'll do a little exercise where we go online and look at values of companies. I haven't looked recently, but I'm sure Facebook is worth a lot more than $5 a share. So this is what people who don't invest are people who are, they use speculation, meaning they kind of guess. They think Facebook, $5 a share, that's undervalued, that's going to grow. I'm going to buy 100 shares and I'm going to hold on to it, and then I'm going to watch it grow. And then at a certain point in time, I might think, okay, I've done really, really well, I'm going to sell. And so There is an old adage in the stock market and buying stocks is buy low, sell high. Buy Facebook at $5 a share, sell Facebook when it's $100 a share, and you make $95 for every share that you own. Okay, so it's speculative. The values can go up or they can go down, and you as the speculative purchaser have to decide, when do I sell? And that is always a great question, and one that not many people know really well. I don't know, so I use a broker who studies this and knows this. Okay, so so there's two ways as far as the social function of stock, and that is you can invest for the long haul, or you can go in, buy low, let it rise a little bit, sell high, and make some money on that. So that's the social function. That's a little bit about stock markets, and I'll have us go through an exercise where we'll go online, and remind me to do that. We'll go online and we'll look at the values of different companies. All right? Hope this lesson made sense. Hope it was good. And